Very excited to welcome back the great Andy Schectman to guide us through these volatile markets and speak on some of these crazy headlines we've been seeing. Welcome back, Andy.
Great to see you, Elliot. Thanks for having me. And you're right, it sure is crazy, no question about it. And I think it's going to continue to be crazy for the foreseeable future, as I think the Fed is pretty much out of options. And as we've said before, heads you lose, tails you lose. So crazy times indeed. Good to be here.
Absolutely. So the first thing that kind of just came out, which I think shocked a lot of people here. So companies unexpectedly cut 301 jobs in January as Omicron slams labor market. So private payrolls fell by 301K versus the estimate for a 200,000 job gain. So that's a $500,000 swing in the wrong direction. What do you think about that?
You have record labor participation, poor numbers, record low labor participation, poor numbers. And the interesting thing about it is we're being told that we have 3.9% unemployment, Elliot. And that's the funny thing about it, is that we're being told we have 3.9% unemployment, but have you tried to go to a fast food restaurant lately? Have you seen all of the help wanted signs? If you go to shadowstats.com and listen to John Williams, and again, you know, all John does, as we've talked about before, is show the statistics and the numbers the way, in this case, the Bureau of Labor Statistics used to calculate things prior to 1990 and 1980. He has various metrics, but the bottom line is that by his calculations, you have all of these people that fall off the unemployment listing. They're no longer looking for jobs. So you have people that are just quitting their jobs and for the last 2 years have been incentivized to stay home and play video games or be with their kids or do whatever. The real unemployment rate right now is not 3.9%. It's almost exactly 25%, according to John Williams, 24 point whatever, 7 or 8%. So what you have here again is statistics being revised, projections that are unrealistic, and the atmosphere or the culture or the environment that the Fed and the government has bred over the past 2 years has eviscerated the small business, has devastated a good portion of the economy. And I think that when the confusing thing for most people is to see 3.9% unemployment. Those are numbers that are lower than before the pandemic, yet you have 25% real unemployment. You have labor participation rates falling off a cliff. So crazy times, very confusing times. And it's no different than the Fed telling us that inflation is 7%. Shadow stats here again will tell us it's at 50% and 15%, excuse me. And so I think the common thread here, in many respects, and we can even get deeper into this topic if you'd like, in terms of deceit, is that we are being lied to by the Bureau of Labor Statistics. We are being lied to by the government. The numbers that are being fed to us fit an agenda that allows them to inflate and allows them to continue to enact monetary policies. So the Federal Reserve's charter is to keep stable prices and full employment. I mean, that's what they're supposed to do anyway. And so, we're nowhere near what they are telling us, and we're a whole lot worse than the numbers will show. So yeah, I think those numbers are spot on, and I think you'll see more of that over the next several months as this continues to unwind.
Wow. So you do think it's going to continue to unwind. And I mean, we're definitely seeing that in the market, just in these kind of high risk deals. We're seeing the SPAC market unravel. We're seeing obviously like the high growth ETFs like ARK crash hard. Do you think the bubble is truly unwinding now, or is there anything they can do to step in and save it? It seems like the Fed still has so much power. The market's still so sensitive to everything they say. So maybe they could say something to kind of pump it again.
Well, I think, first of all, I think what they're going to do is they are going to act tough on inflation for a little bit. You see, you can't have the world reserve currency go nominally negative. I think what you're seeing is the market price in for rate hikes per year. I think they will hike them for the next 2 years, or they'll try to, until the market throws up all over itself, if not for some other event that we can talk about as well. But when you talk about 0% on the federal funds rate, if you have the world reserve currency go nominally negative, you are in uncharted water, and it's not a good thing. So what I think they're going to do is they're going to stay true to their word, as funny as that sounds, at least temporarily, to pare down their asset purchases, start raising rates by March, and in fact, actually selling off their balance sheet. And what that will do is, I think, raise rates to a target of probably between 2 and 3%, which will very quickly start to inflict pain on a market that is substantially overvalued and inversely correlated to a rise in interest rates. But in order for them to be able to come in and rescue this inevitability, they have to have some leeway, and they have to raise rates up to the 2 to 3% range, which is going to create chaos. But will give them the ability to step back in, lower rates once again, and then enact more monetary policy and stimulus, probably with a vengeance. But, you know, look at it this way. What good does 2% interest rates do? The 8 rate hikes that they're talking about in upwards ends of 2%. It's spitting in the ocean, Elliot. I mean, you have 7% inflation and 2% interest rates. You're still nominally negative by 5%, or real negative, by 5%. And so it doesn't do anything, but it gives them a little bit of leeway. And when you talk about, you know, inflation right now, you know, you had a year ago, let's look at the numbers. Just in Biden's first year, you had gas at 250, now it's at 330. You had the 30-year mortgage at 2.95%, now it's at 4.06%. The third quarter GDP in 2021 was 33.1%. It's predicted to barely be above 2% right now. You're talking a 30% swing. And inflation was 1.4%. It's now north of 7%. This is 1 year into an administration, and just the first 12 months. And when you figure all of those numbers in, plus the deceit, they're lying to us. You even look to the fact that they told us they were going to start to taper, which means buying less of something, right? And they said 15 billion a month. Their numbers in December were only 5 billion. So I think that you have to take them for their word partially, because they have no other options but to let the market throw up and come back in and save it. They will choose inflation over destruction of the markets. And I think that's something that's very important here to understand. You know, there was a Freedom of Information Act that was recently released by the Levy Economics Institute. And Glenn Beck talked a lot about this recently. And, you know, where in 2008, there was 700 billion spent on TARP and 700 billion on infrastructure. That 1.4 to 1.5 billion dollars is what created the Tea Party. People freaked out by it. Then they bailed out the banks for 3.5 trillion, Bear and Lehman and whatnot. That's what they told us. $5 trillion they told us they'd spent. But this FOIA release, where the Fed actually sealed the records for 10 years and brought it all the way to the Supreme Court to not release it to the public. But thanks to the Levy Economic Institute and their Freedom of Information Act, it is now knowledge that it was not 5 trillion that the banks or that the Fed spent. It was 39 trillion, in giving 1.3 trillion to Bank of America and 1.9 trillion to Merrill Lynch and over 2 trillion to Morgan Stanley, and basically nationalizing Citibank for 2.5 trillion, which is also co-owners of the New York Fed. That $29 trillion that was injected into the system doesn't include the 3.7 trillion to Japan, the 1.5 trillion to the UK, the 1.4 trillion to to Germany. And so we're not just collapsing our economy, we're inflating the entire globe. And if you look at the numbers that are out right now, you have the highest inflation rates in the UK since World War II, I believe. You have the highest, or in 30 years anyway, in Germany since World War II, and in Japan in 2 years. So, we're setting ourselves up to be hated by the world because the information, they're lying to us. Those are just the numbers up through 2010, and all of that predates the COVID spending of over $10 trillion. And so when you talk, and then add in the repo markets of $1 trillion per week, and I think anyone wondering where inflation is coming from needs to think again. You have a Federal Reserve that has done all they can to flood the markets with money. And this is why you see asset prices at all-time highs, because these banks and the hedge funds and the wealthy take that easy money at low interest rates, plow it into assets and blow up the assets, make fortunes. This is why they're not bitching about inflation. They don't care that it costs more money to buy food. They don't care that it costs more money to drive their Ferrari or to fly their private jet. They don't care that it costs more money to heat their mansion. And it's interesting that those three items, food and energy and housing, are not calculated in the CPI, yet those are the most inflated numbers. And so you can see that the Fed has been lying to us since 2008. And even back then, they were lying to us when we were told that the subprime crisis was contained, only to see it blow up. But they lied to us and sealed the records, had to go all the way to the Supreme Court and the Freedom of Information Act to find out that they lied to us by a factor of 600%. They said it was 5 trillion, it was closer to 30 trillion. So, we're constantly being fed misinformation, and we are led to believe a narrative that they're going to get tough on inflation when everything they've ever done has proven otherwise. And so I think what that tells us is it's going to get very rocky, very bumpy. This is why the SPACs are not performing well. You are looking at speculative type of investments that, instead of an IPO, they found a way around it with the SPAC. But I think the market is pricing a lot of this in. I think if you look at much of the market, most of it is underwater. You have a half a dozen or a dozen so stocks that are so heavily weighted that you pump money into companies like Apple, United Healthcare, the big stocks that have massive weightings in the indices, and it looks like all is calm. But if you open up the hood and look under, you see the majority of stocks are well into bear territory. And this is, I think, the market pricing in what the Fed has no choice but to do. Where the rubber meets the road, Elliot, where it becomes interesting, is to see, do they follow through? And my inclination is hell no. Because if they really do raise interest rates high enough to combat inflation, in this case, they'd have to raise it 700 basis points to over 7%. And you're looking at a major catastrophe of proportions that no one in this country, except maybe the oldest people in the country, have lived through, where you see the greatest depression of all, where all three pillars of wealth in this country collapse as they are all inversely correlated to a rise in interest rates. So, yeah, I think this is just, I really think this is the very, very beginning. And it's what is called modern monetary theory, where you just print your way to prosperity. But, the folks in Weimar Republic and in Argentina and other parts of the world, Zimbabwe, have proven that doesn't work so well. Maybe they just weren't as clever and as adept at hiding the information as the Fed is. But I think more of the same is coming. They'll do what all governments have done throughout all time, and that is choose the printing press or inflation over austerity.
Absolutely. And so just thinking about the socioeconomic impacts of that, right? Because we had the January 6th event at the Capitol, we had Black Lives Matter. People are super fed up, especially the people that don't have assets, like we've talked about. And so if they lose control and are unable to stimulate the stock market higher, then do you see real populist unrest happening? I mean, people seem really fed up. I mean, as far as just thinking about like where we go politically from here, it is an election year this year, by the way, right? So I don't know how the Democrats think they're going to stay elected if they can't pump the market. So I just want to get your thoughts on that.
Well, by letting the market go higher, what you're creating is that K-shaped environment, where the wealthy get wealthier and the poorer get poorer, because it's an inflationary environment where the assets are being inflated and the real goods are becoming scarce and are becoming much higher price. Milton Friedman, the great Austrian economist, just made it real simple. He said, more money chasing fewer goods. That's the situation that we're in. But if you listen to the ridiculous left woke media and politicians like Elizabeth Warren, she's telling us publicly that it's the greedy capitalism, the greedy capitalists that are creating this. It's corporate greed that is causing, and price gouging that is causing this environment where the oil companies are gouging the public. And so what is that the next step towards? And that is the next step towards what President Nixon did in 1971, which would be the path of least resistance, and that is price controls, where they'll come in and say, you can't raise the price of gasoline or food for the next 90 days or whatnot. And that is what all that leads to is inferior quality and more supply chain problems, because when people are paid less, they don't work as hard. And when you have products that cost less, or you're not able to sell them for the real value, you get inferior quality. And then when they finally release the price controls, the price shoots up to meet equilibrium. You can't mess with economics and Mother Nature. Adam Smith called that the invisible hand of supply and demand. And if you think about it, there is an invisible hand of supply and demand. That's that X when you take Econ 101, where supply meets demand, that equilibrium. If you mess with one or the other, you have problems ultimately. And so I don't know. Look, I think that the keeping the markets afloat really appeases the wealthy. I don't think the social unrest really has too much to do with keeping the markets afloat. More so putting food on the shelves and lowering the price of gasoline, lowering the price of food, that kind of stuff. Because in reality, inflation is a giant tax on everyone, and it's impoverishing the lower income portion of this country, really of the world, because inflation is spreading like wildfire all over the place. But so I think that they have two choices: either let the whole system blow up, maybe that's the Great Reset, and they do that by letting interest rates meet equilibrium with the free market. In other words, instead of having them being set by the politicians and the bankers, the market decides where they should be. And if interest rates were where they should be for the inflation risk and the credit risk of the U.S. government, then, and the market risk, they'd be much higher, and the markets would be way lower, and you would go through the pain that is inevitable, that must be done. The cleansing of the system must be done. And we've talked about the crack up boom in Austrian economics, and the only piece that's missing is that the people have yet to really realize that the Fed is out of options. And when the Fed does ultimately realize, or when the public ultimately realizes that the Fed will choose inflation, that's when the dollar becomes a pariah and a hot potato, and they buy anything that they can get their hands on to get out of the dollar. That's when all assets go nuts. And you can make an argument that we're partially the way there with the people who understand all of this and have been inflating their assets, but we're not quite there yet. And that's, the final stage of this craziness. But I think that's where we're ultimately heading, when there is mass realization that there's no way out of this problem without either further debasement of the currency or a sacrificing of the markets, one or the other. There is no middle way out, and or easy way out. And that ship has passed, in my opinion, years ago.
Absolutely. So investors are, facing options. They can buy stocks. They can't buy bonds because the interest rate is lower than inflation, so they're worthless. So they could either buy stocks or like hard assets like precious metals. Crypto seems to be trading with stocks. That's kind of a proxy for stocks. There's pretty much two options: risk assets versus, hard assets like precious metals. Do you think you need some hard asset precious metal ownership as like insurance in case everything falls apart? Or like as far as portfolio allocation, how do you view that?
I view it as wealth. I think that if you envision your pyramid or your financial portfolio as a pyramid, the base of your pyramid needs to be really wide right now in things like precious metals, paid for real estate. I guess you could throw Bitcoin in there. It's very volatile. I don't know if it should be in the base or the top. I guess there's a part of me that feels they're targeting Bitcoin and all the cryptocurrencies. If you look at what Powell said recently, he said the two biggest, first thing he said is that climate change will be a big policy tool. Stress tests will be applied towards climate change, and climate stress tests is what he called them, and that'll be a key tool. He said moving forward, and he also said the biggest threat to the financial system is a global cyber attack. Well, what's the big knock on mining crypto or Bitcoin? It's the climate ramifications, the energy that it uses, whatnot. It's not very green. And obviously a global cyber attack where you had 11 countries, including U.S. Treasury, the IMF, the BIS, these are the same people, the World Bank, Klaus Schwab, these are the same people that ran a simulation on pandemics and specifically coronaviruses in 2019. Doesn't it seem like they're preparing us for some sort of an event? And I really, truly, in my heart, believe that they will target cryptocurrencies. This is why they hired 75,000 plus new IRS officials for all the people who have become millionaires in cryptocurrencies, many of them trading within the ecosystem from one currency to a next, to a next, to a next. Those are all specific transactions. And if they're not reported, I think they're going to have their day of reckoning when they get audited. And I think they're looking to eliminate that overt competition. And I think when all hell breaks loose is when they roll out their new Fed coin, which goes right along with, you look at this gal, Lael Brainerd is her name, and she's second in command at the Fed. And I thought she was going to be the Fed chairman, but they reappointed Powell, and she was voted vice chair. But her paper that she wrote talks about modern monetary theory, a digital currency, abolishment of the commercial banks. Everyone gets their money either added or subtracted, depending upon inflationary or deflationary scenarios, by the Federal Reserve. These things that we see happening, there's a playbook for it. And whether it's by coincidence or this is the road we are heading down, I think that people are making a mistake to have all of their assets in dollars or dollar-based investments. And, if you have done well enough to make money in cryptocurrency, taking some of that off the table, don't have to take my word for it and sell it all. Certainly that's not what I'm advocating, but taking some chips off the table, putting it into metals, which have outlived 2 world wars, German hyperinflation, Great Depression, and every pandemic and every scenario thrown at it for 5,000 years. I think that's a wise move. And you're right, you need assets, Elliot. And as I've said before, assets feed you, liabilities eat you. And in this environment, that has never been more true. So when you talk about a financial pyramid, what the Swiss have used for 300 years to direct their investment schemes, it is the base of your pyramid needs to be wide enough with assets like precious metals. I used to say cash in the bank, but with the level of inflation, you're losing so much so rapidly, it doesn't belong there anymore. But paid for land or a farm, whatever, there's your base of your pyramid. And that should be 60 or 70 or 80% of your portfolio. The middle portion of your portfolio, I used to say treasuries, because they threw off some income. When I started in this industry, treasuries were at 9% on the 10-year note, but not such a good choice anymore. Maybe utility stocks throwing off a dividend. The idea is something a little bit more speculative, not risky, but something that throws off a little bit of return. And the middle portion then is your income producer. The top 10% of your portfolio is the speculative. And really, in my heart, that's where I believe mining shares and cryptocurrencies belong. And the home run belongs. So that the theory being, if you lose everything on the top 10%, you don't make a penny on the middle 20 or 30, just break even. As long as you're not going backwards on the base of your pyramid, you're not losing ground. And I think that really right now, more than anything, the old adage, return on your money is great, but return of it in this environment might be better. And look, my curse, Elliot, is I'm always early. And most of the things that we've talked about as a company have come true. Many times they've come true years later. But the mathematics of where we are will come to bear. And, Mother Nature will get her pound of flesh one way or the other. It's just a matter of how long they can keep the ball up in the air. They've certainly outsurpassed my expectations and in terms of how long this would go on for. But it just seems it's getting tougher and tougher to do it. And so, yeah, I think safety, caution, conservatism, this is the way that I look at metals. I'm not trying to get wealthy. I look at it as wealth. And I have a hard time finding anything that I like better than silver right now. And I look at it as the investment or the value of a generation on every metric: supply, demand, the geology of it, the duality of that demand between industrial and monetary. There's just a million reasons why I like it. And I think that, to me, is kind of striking a balance between potential and wealth and historical wealth, and something that fits in the base of your pyramid, but has performance really indicative of the top 10% of your pyramid.
Yeah, absolutely. I view physical precious metals as like just insurance against the whole digital landscape, where you can pretty much hold all your digital assets, stocks, crypto, whatever, but like you need a little bit of insurance, at least a little bit, just in case things go haywire, like you said, cyber attack or just any other threat. So where can people go to? Your CEO of Miles Franklin, where can people go to buy metals if they are interested?
And we would want them to send us an email at info@milesfranklin. Mention the early stage investor in the subject line. We will send a updated inventory. We will promise your listeners the best price. They can have their questions answered. They can direct them directly to me if they'd like. They'll also receive a call from one of my experienced brokers. We are old school, Elliot. We do things the old-fashioned way. And so a phone call, an email, we'll get back to you promptly, making sure it's a good experience. And we'll make sure your listeners aren't the first complaint that we've ever had in 32 years.
This discussion is for informational purposes only. Please consult a certified financial planner when making any decisions about investing. And do your own research before making any decisions. Investments are risky, and you can lose lots of money in them.